One group that we all love to talk about and that investors simply loved last year was media. Media stocks as a whole gained nearly 100% from their March 2009 low until today, outperforming the S&P 500. Well, joining us right now to talk about media companies and their stocks is Hal Vogel. Hal is CEO of media investment firm Vogel Capital. He also was ranked as top entertainment industry analyst for 10 years by Institutional Investor magazine. He's also out with a book, Financial Market Bubbles and Crashes, a subject he's been researching for decades. I'm trying to race through because I want to get to you.
Thank you.
Hey, let me ask you, how does a top-ranked media analyst, you've covered media forever, write a book about bubbles and crashes?
Well, this is a lifelong interest that I've had in stock markets. Ever since I was a teen, I was interested in stock markets and stock trading, and so this was a natural progression for me.
And you've got a PhD in economics,
yes.
Correct? So what did you find out in terms of bubbles?
Well, bubbles frequently follow crashes with a very close time frame. And after the bounce off of the crash, you get a period of difficulty. And I think we are at that intersection right now. We had a 60% rise in the market. And now the credit has to continue to expand. Bubbles and crashes are very sensitive to the amount of credit that goes into the non-GDP economy. If it can't be absorbed by the economy, then it spills over into things like stocks, gold, real estate, etc. And that's what we've seen for a very long time until the crash. What happens when we get to a severe decline is the Fed eases up, the central banks throw money at the problem, expectations begin to rise, and at that point in time, the stock market follows because the cash or the credit that is generated cannot be absorbed immediately. And we've been in that phase for the last 9 months or so. And now I think it gets more difficult because we are at this point in time where if the economy improves significantly, it takes credit out of the stock market or out of these other things. It absorbs the credit. And if it doesn't improve, we've got a real problem. And in terms of the bank credit availability, I have never seen anything like this. The commercial bank credit availability is still down 4 or 5% year over year compared to long history. It has not happened since 1975 when the data was there.
Let me ask, you know, we talk recently a lot about the South Seas bubble in the early 1700s. Right. Apparently after that, the British king called all the bankers of London and put them into sacks with snakes and dumped them into the Thames. Now after this bubble, Alistair Darling and Gordon Brown are imposing 50% taxes on all bankers' bonuses in London. Is there anything different about this bubble? Is there anything that makes you think about this bubble is so different from all the others that we should be extra specially worried?
Only the mega amounts that are included in this. Other than that, it is typical. They look for retribution, they look for scapegoats, they look for red meat, and that's what they're doing right now.
I wonder, you talk about bank credit. I mean, it struck me when I heard the president talking about a new tax that he's going to slap on these banks. It can't possibly help the lending situation, right? I mean, if you want a bank to build up capital and lend more money, it doesn't really make a lot of sense to charge more fees.
Exactly right. And the banks have kind of rejoiced at this current situation because it's zero interest rates. They have a zero cost of capital, and they have a risk-free trade here, lending it out back to the government at 4 or 5 or 6%.
We got 40 seconds left. I can't let you go without talking about media. My understanding is you don't really like much in the media space right now.
No, I'm concerned about the stock market, and I'm concerned about the consumer spending and therefore advertising. Media stocks still today are very sensitive to advertising. CBS, of course, gets about 70% of its revenue from advertising. Time Warner maybe 25, Viacom 40 or so. Even NBCU has 30%.
All right. I think we're going to have to leave it there. You're going to have to come back and talk some more media with us, will you?
Thank you. Be happy
Especially
to do
about
so.
Conan.
I know, Conan. Do you think they made a mistake?
They can't unscramble this egg that they did. They did have a mistake, yes.
Okay. Can they afford to lose, Mr. O'Brien?
They will eventually afford to.
At a price.
Yes.
They'll afford a $40 million loss.
Should Jeff Zucker keep his job? I got 10 seconds.
Questionable, but he's got a contract right now.
Yeah, but we know what can happen with contracts.
Right.
All right. We're going to leave it there. Hal, thank you so much. Hal Vogel, CEO of Vogel Capital.